Today, Li Auto has cut their guidance, and I will tell you what this means for the industry and for Nio. Also, I will be quickly talking about Nio Norway and some rumors, and I will also talk a little bit about the Fed decision yesterday to keep the rates where they are. So first off, about Li Auto, I've been commenting a couple of times here on the channel that I'm not interested in investing in this company and that I don't see them as an EV company. And that is not meant as any bad commentary. I actually wish them well. I'm actually incredibly impressed by their performance, and I do think that this is an undervalued stock, similar to many other Chinese stocks given at their growth rates, but that's a different topic. Just saying, I'm not an enemy of Li Auto here, nor do I want to talk him down. But I think today's decision to cut the guidance demonstrates something, which is that they are not an EV player yet. Hopefully to come. The Li Mega, I think it's a controversial product. Actually, for that fact, I like it. I know there's lots of people who don't like the design. I think it's innovative. I like when they try new stuff. But the fact is they're taking in less orders for it than they previously thought, and that's why they are cutting the guidance. And that's just demonstrating how difficult it is to launch a new EV into the market and sell it at volume, especially in a higher pricing tier. And that's exactly what Nio has been doing since the early days, and where Li Auto in comparison is doing arguably a smarter move by selling extended range vehicles, which are currently more in demand by consumers because they are more practical, less risk, and so on. However, clearly you see the foundations of the two companies are different, where Li Auto is rooted in more of a legacy business model, despite having very cool smart cars, connectivity, lots of cool interior features and stuff. But it's fundamentally not an EV company, and that has gotten clear again. And so we must take this in consideration, especially when we keep on talking weekly numbers, which I thought are, a little bit short-sighted. But in the past, Li Auto was always looking very, very good at those numbers, simply for the reason that are actually not competing in the same industry as Nio is. Well, they are doing car sales, of course, but not EV. And in my point of view, EV will take over the world, and those who are early in that, like Tesla, BYD, hopefully Nio, will do incredibly well over time, and all of the others will have a tough transition period to manage, while yes, now currently plug-in hybrids, extended range vehicles and so on are really in a short-term period where there's lots of demand for it. But I think that is going to change in the long run. Lots of talk, I've done videos about that, that EVs are a hype and nobody's currently buying them and so on. I think that's short-sighted. Of course, the growth rates, the year-over-year growth rates are coming down, but the adoption rate is going up. And so we'll see, in my point of view, that more than 50% of the market later on will be penetrated by pure electric vehicles, maybe up to 100% at some point in time in a very distant future. And it's now about who is building the technology, who's building the infrastructure, and who has the brand for it and the right products. And so even a top performer like Li Auto, seemingly having their difficulties to go into this business segment, is showing just how much of an importance we have to, or credibility we have to give Nio here for getting 40%, more than 40% of the full electric vehicle sales in the premium to luxury segment in China. So they're dominating their segment, and the problem for Nio currently is that they are not yet available in some of the cheaper segments, the more mass market segments, which Nio is about to enter. So that's something for the future. And speaking of the future, coming to rate cuts is always the determining factor whether or not investors are looking far out into the future, or if they're rather short-term oriented, what the interest rates are. And currently the interest rates are, spiking again, and the Fed left them untouched as expected. I think the good news for China investors is that they are still looking at 3 rate cuts this year. We just don't know when, so it doesn't seem to be a short-term thing to happen unless something is, maybe there's some stress in the market or some new economic data coming out that's looking not good. Maybe then the Fed would decide earlier to cut rates, but so far it might be more towards the end of the year. And that's when China will also start stimulating its economy again, and overall money will possibly flow from US equities more into emerging markets. It's not what I'm saying, that's what other people are saying, that's what the big investors are saying. The funds are waiting for that, but currently it's not yet the case. The bad news when you come to Nio, maybe at yesterday's rate decision, is that it's not really good for the 10 years, sort of more far out rates, and that means for a company like Nio, where most of the cash flows and profits are far out in the future, well, hopefully, if they manage to survive, if they find a way to break even, if they are successful as a company, then their profits are more far out in the future. But that's not currently what the investors are looking for. Just plainly explained, right? There's much more to it. But anyways, that's the main takeaway for the Fed decision yesterday. And so that's why Nio's stock is currently struggling. Nio doing the right things in most parts, in my point of view, and needs maybe a little bit more, we should be more open to admit that they have achieved a lot when we're looking at how Li Auto is now performing, entering the segment. But that doesn't help the stock price for now, that's for sure. And the story must be that Nio is start to decrease the net losses to quarterly ones, and we have seen the previous steps which they are taking, for example, cost cuts, and what has been announced during the earnings call. Speaking of which, I'm here in Europe and experiencing Nio Germany, but I haven't tested out Nio in other parts of Europe, to be honest. But there has been speculation that Nio is kind of pulling out of the market here, maybe as a cost-cutting measure or because it was unsuccessful. I always tell people to not watch the European numbers because they're too tiny compared to what's going on in China. But anyways, it's true, the absolute numbers of sales for Nio, for example, Denmark, are very small, even in Germany, even for other competitors like BYD. I've spoken about the reasons in various previous videos, for example, the lack of shipping, but also I think there are strategic aspects to it. And as what I've observed as a Nio user here, they are also struggling from an organizational point of view. But I've seen the rumors that they are saying Nio is pulling out of the Danish market, which are not true. I wrote a message in my Patreon community saying that I think this is just part of a consolidation. So yes, that's part of the cost-saving efforts and trying to reorganize Nio in Europe. And they have, in my point of view, established a central European team which is managing all of the different markets instead of having each team for the country separately. And so therefore, small markets like Denmark, you can, or even Sweden and so on, you can just manage centrally, and you don't have to replicate the teams in each of the markets and therefore have kind of double hirings. I noticed that they also have cut or consolidated, merged a couple of jobs in Germany, and I think that's just the whole story in all of Nio Europe, and that's the way how they are going to save cost. That doesn't mean that they are giving up on these markets, and I do think that they are still going to expand in the other European countries like anticipated, but in a different fashion. I think that's still trying to find the right way of doing that. And it's not unusual for a startup company, I think, to have to pivot, to experiment with things, having struggles of growing, of doing the right steps in the first place. Definitely mistakes have been made, but you know, you need to be careful if people are saying out there, oh, Nio's exiting different markets. These are oftentimes some of the bad narratives that are put out there around Nio, and you need to be careful, like who's you know, saying that and why they are writing articles about this. It's not often really the bigger picture and what's really going on. It's just frightening investors. I think what we should look more cautiously is actually, are Nio able to execute on a strategy and actually delivering also on some of the promises which they're making, at which Nio in the recent past has unfortunately a small history of missing on their own guidances. And I think that's a task for the management to manage the expectations in a better way. Oftentimes things go wrong. That's just normal. That's, I mean, even being invested in Tesla for a long time, I've seen that happen also with Elon lots of time. I think Elon is more outgoing and more promising. I think Nio is not always that way. Sometimes they're being criticized for the fact that they are not pushy enough. I've been saying that on the channel here before, that they should be more talking about the technology they're having, the benefits and so on. But I see that's now picking up slowly, with Nio being more outgoing about their ADAS technology. Now, by the way, hiring 20,000 new users who are able to experience those NOP plus city pilot features in China. They're gonna have more conferences around this. They are now speaking more about battery swapping turning a profit center, battery swapping playing a part in the grid stabilization and so on. So I think they're doing some changes, subtle here. Maybe you don't see it yet all, but as far as I'm watching it, I think that's the bright spot, that they have set a very ambitious vision, and things are coming together. But still much work to do, still many bumps along the way, and unfortunately a market that is far more short-term oriented than looking at what might be in a couple of years down the line. So that's the bottom line here. Yeah, let me know in the comments what you think about it. Thanks for watching, and see you in my next videos.